You will find the link to decentralized finance yield farming cheat sheet in the description and pinned in comments below. People lose everything in crypto not because the market is wild, but because they read the charts wrong. What if one simple skill could stop you from making those fatal mistakes? In the next few minutes, I will teach you a beginner friendly way to read crypto charts. You will learn three practical tools you can use right now to avoid losing money, and I will show one secret rebalancing trick top traders use to protect gains. If you want simple clear crypto lessons that keep you out of trouble, hit subscribe now. I make practical guides like this every week with no fluff charts. Charts are not crystal balls, they are maps. But most beginners try to predict the future, not read the terrain. Think of a price chart like a hiking trail map. Peaks, valleys, and marked routes show where people traveled before. Candles are footprints. Volume is how many people walk that path. Support is where hikers rest. Resistance is where they turned back. Three basics: trend, support, resistance, and volume. Master these and you stop guessing. If you think a single indicator will save you, it will not. Ignore this and you risk buying at the top or selling at the bottom. Those are the exact moves that drain accounts. Next, I will show the simplest way to spot tops and bottoms with one visual trick. Trend is the most important idea, but most beginners read it backwards. There are three trend types: uptrend, downtrend, and sideways. An uptrend shows higher highs and higher lows. A downtrend shows lower highs and lower lows. Sideways means no clear direction. Use a simple 50 period moving average as a guide. Price above it is bullish, price below it is bearish. Draw a line through swing lows for uptrends, draw a line through swing highs for downtrends. If the price breaks the line decisively, the trend changed. Most retail traders lose money because they trade against the trend. Trading against the trend is like swimming against a current, exhausting and dangerous. In the next section, I'll show a simple pattern that warns you before a trend reversal. There is one pattern that screams reversal coming and beginners usually miss it. Look for false breaks, price pokes through support or resistance, then snaps back. That is a trap. Use wick length, candle close and volume to confirm. A long wick through support with low volume is likely a fake out. For example, a coin drops below support or on small volume, then rebounds on higher volume. Smart traders buy the rebound. Late buyers panic sell. Wicks lie. Closes do not. Fall for false breaks and you will be left with losses while smart money quietly re-enters. Next, I will explain how volume reveals who is really behind a move and how to use it to your advantage. Volume tells the story nobody else reads. High volume with direction equals conviction. Volume confirms moves. Rising price on rising volume equals strength. Rising price on falling volume equals a warning sign. Watch volume spikes at breakout levels. If a breakout lacks volume, it is often a trap. Combine volume with RSI or MACD as confirmation, not as the main signal. Over 60% of failed breakouts show weak volume. Ignore volume and you accept losing more than you should. It is like blindfolded trading. Now we will build a simple entry exit plan using what we just learned with no guesswork. You do not need perfect timing. You need a repeatable plan, three-step plan: define entry, set a stop, and set a take profit. Keep risk per trade small, 1 to 2% of your portfolio. Entry should come after trend alignment, volume confirmation, and no false break. Stop should be placed below the nearest meaningful support or above resistance for shorts. Use ATR for spacing if you prefer a volatility based stop. Take profit, use a risk reward of 1 to 2 or scale out at multiple targets. You will win more by losing small and often than by chasing a perfect trade. No plan equals gambling. A simple plan saves capital and sanity. Next, I will reveal a rebalancing trick that protects gains during a bull run. This one trick saved many traders during the last bull run, and beginners rarely use it. Use percentage based rebalancing. When an asset rises past a set allocation, for example 5% above target, sell a portion and shift to stable holdings or diversify. If example target 5% of your portfolio in coin A, if coin A grows to 8%, sell down to 5% and lock profit. This controls emotional greed, enforces discipline, and captures gains without market timing. Greed compounds losses. Rebalancing makes profits habitual, not emotional. At the 50% mark, I will share the biggest mistake beginners make and how to avoid it. Most tutorials stop here. They teach indicators and leave you alone. The real danger is portfolio behavior, not charts. Surprising twist, the single biggest loss for beginners often comes from ignoring position sizing and rebalancing, not from missing an indicator. You will be shocked how many lose more after a big win. If you do not fix this, one big win can turn into a total loss. Now I will give you the final payoff, a compact checklist that makes everything actionable. Here is everything in one simple checklist. Use it before every trade. Is the trend aligned using the 50 moving average or a trend line? Is volume confirming the move? Is there a clear support and resistance structure? Is the entry supported by a clean candle close? Is my stop defined and does size risk equal 2% or less? Do I have a rebalancing rule for profits? Practice this for 30 days and track results in a simple spreadsheet. You will be surprised how fast you improve. This checklist turns fear into predictable behavior. That is the difference between losing and building wealth. One last thing, a mistake almost everyone makes when they start, do not skip it. Common mistake, over leveraging and ignoring emotional rules. No indicator fixes poor psychology. Psychology is greater than indicators. Protect capital first, everything else comes after. If this checklist helped, subscribe now for weekly crypto guides that keep you safe and profitable. I share simple practical steps, not hype. Before you invest in any coin, watch the next video because it explains stablecoin risks and misconceptions and could save you from losing your stable value. Click now, comment below what is the hardest thing about reading charts for you. Type checklist if you will use this plan on your next trade. Tell me one chart mistake you made and I will read 3 and reply. Track one trade per day, date coin, entry, stop, target, outcome, and lesson.